So Honeywell did better on their earnings per share, really met right on the nose their revenue, but their stock is way up. Why?
You know, I think people are anticipating bad news. There really wasn't any bad news in the release. You know, people are worried about margins and costs, and they beat big on the margin side. Organic growth, 10% in aerospace, 12% in their automation businesses. So across the board, good news, and they raised a little bit with 1 quarter left. And people are worried about cuts, or you know, the best is behind us, and
Headwinds,
they delivered.
China, foreign exchange, things like that. Normally, Honeywell has to face that kind of thing.
Yeah, FX was real small, like 1%. No mention of material costs, you know, or tariff impacts or anything. We'll get into that in the call. So, but it's pretty clean.
Well, what stood out to me with Honeywell is that they actually did well, and the stock is actually up, which is a very different scenario than we've seen over the last 2 weeks with some industrial names. We have a full screen that kind of shows a beat or miss for some of these names, and then how dramatic the stock moves have been on the day they reported. Like Textron yesterday off 11%, United Rentals 15, Ranger 13, down 13. I mean, even though United Rentals beat in theory, the stock was still hammered. What is this telling us?
People have been worried for a while now about, are we at the peak of the cycle, particularly for the deep cyclicals like Caterpillar, like United Rental. And United Rentals rental rates didn't go up, and people are like, oh my God, pricing is going to go down, the market's rolling, and they're very capital intensive. Fastenal also talked about costs. And the tariff impact being bigger than they expected. So people went in worried. Now they're looking for the things that are negative. And the United Rental numbers were good. And I think the outlook is still good, but the panic button has been set. So.